Welcome to episode 109 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we are going to take a look at how to trade a trend. We will take a look at how to identify a trend, what's the best place to enter a trade in a trending market, and most importantly, how to exit the trade with a profit.
We're looking at how to trade a trending market. This is Euro Pound 1 hour chart. Here, as we can see, price has come to a support or resistance level, and then we see a trend reversal, and then price moves up. So if, let's say, we come to the market when price has already done this, how do we then get into this trending move? So that's the question that gets asked often enough. So let's take a look. So let's say price came here, it has done this. So the first thing to remember is that once the prices has been trending up, we don't want to jump into the trade as the price is moving up or down. We want to make sure that we wait for a pullback and then get into that trend. So it doesn't matter what kind of trend it is, it doesn't matter what pair it is, we always get pullbacks. So in this case, as we see that the price has changed direction here, then we saw that momentum came into the market with this big candle. The momentum has now shifted to the upside, so we wait for price to pull back, and as we can see here, price starts to pull back. So as the price is pulling back, we can draw our Fibonacci levels here. So you just pull your Fibonacci from the bottom to the top here, and then we wait for price to show us reaction here. And as we see here, price comes into this previous support and resistance level that it had broken through, and then it starts to hold above this support and resistance level, and it also coincides with our 38.2 pullback level. So we have Fibonacci level as well as our support and resistance level. So this makes it a higher probability trade. Once we get a nice bullish engulfing candle here, this is the time to enter the trade. So we enter the trade long here, and we can put our stop behind this level. So we want to make sure we give price some room to breathe. So we'll put our stop here behind our fib level, behind our support and resistance level. So in case price comes and tests this level again, as it did here, we don't get taken out of our trade. So we enter the trade long and we wait for price to move up. So our first target is the top here, the top of our previous move. And as we see, the price breaks through this level with momentum and then comes and tests the level from the other side and holds above this. So this is a continuation. It shows us that price is likely to continue higher. So we stay with the trade, and we can always bring our stop closer. So as price moves up higher, we pull our stop in closer, and we stay with the price till we get to the next support and resistance level here. And we see that the price starts to go sideways. It's not able to break this previous high. So that's an indication that price could go sideways, it could go down, or it could pull back. So this is a good time to exit the trade. From entry to exit here, we have 117 pips in the trade. So just to recap, we are trading a trending market. In a trending market, price would have started trending in one way. In this case, it is a bullish trend. Price has broken through this previous support and resistance level, and now we have a trend established. So first thing is we need to wait for a pullback. And in this case here, this is our previous support and resistance level. So we draw our Fibonacci levels here and we wait for price to pull back. So as the price pulls back, we watch it. And as we see that the price is holding above, so it's very important for price to hold above this previous support and resistance level that it broke through, because otherwise the trend is no longer in play. So as the price holds above this previous support and resistance level, we also notice that it coincides with our Fibonacci levels as well. So once we get a nice bullish engulfing candle, we enter the trade long and we stay with the trade, the first target being the high here, and then we see that the price has broken through this high with momentum. So we stay with the trade and we continue on with the trade till we see that the price starts to go sideways and it's not able to break the high anymore. From entry to exit here, we get 117 pips in the trade. So our profit is 117 pips or $1,170 if trading one standard lot. If you'd like to learn more profitable Forex trading strategies like this one, I invite you to visit my course at tradingwithvenus.com/Forex course. In the course, I will show you how to read the candlesticks and different chart patterns. We'll do a deep dive into technical analysis, and I will show you how to read the charts properly, what trade setups you're looking for, and how do we trade these setups properly. I will also show you what are the important fundamental things that you need to pay attention to, how the different fundamental factors drive market price. I will also share with you the trading strategies that I personally use that I have found to be the most profitable. We'll also talk about trade management and how to manage your account and manage your risk so that you become a profitable trader. I will also show you tons of examples that you can go and check out so that you are able to see these trades set up in the live markets as well. As a bonus, you will get access to my pivot point indicator. If you have watched any of my videos, you know I really love trading the pivot points, so you will receive that as a special bonus. The price of the course is $497. To sign up for it, please go to tradingwithvenus.com/Forex course.
Thank you so much for joining me today. I hope you enjoyed this episode. If you like this trade setup, please feel free to share with your friends, and also don't forget to subscribe to the channel. I will be back with another great trade setup tomorrow.